All right, welcome back. We are going to be going over institutional concepts. In the last video, we just went over volume imbalances. The institutional concepts does include imbalances in price, but also we're going to incorporate order blocks as well. And fair value gaps, imbalances, liquidity, smart money concepts, all of these are referred to as institutional trading concepts. This is when a large amount of money enters the market and makes a distinguished pattern, or how do I say this? When an institution comes in and places a large order and it drives the market up or down, it leaves behind a pattern or a type of discrepancy in the market. So it leaves behind certain candlesticks that signify that it will either be retested or needs to be filled by price. And we're going to go ahead and hop into it. I think that it would be better for you to visually see it on the screen to be able to identify what exactly institutional concepts are. If you've heard them before, you know exactly what I'm going to get into. And if not, go ahead and have your pens and paper out, or just be really focused and mark up on your chart as well if you can. So I'm going to go ahead and share my screen, and we're going to go over some institutional concepts. So institutional concepts are trading activities conducted by large financial institutions such as banks, big corporations, hedge funds, mutual funds, pension funds, and entities that manage a substantial amount of money on behalf of clients or their own accounts. Take, for example, if you work for a company that has a 401k, where's that money going that you're getting from your company, right? You have a retirement fund or an investment fund. These go to hedge funds or investment banks or mutual funds or pension funds. And these entities that own this are what invests you into the market. And when a large amount of these come together and place an order on a specific asset or over a short period of time, it tends to create these large discrepancies in price. So institutional trading involves executing large orders on various financial markets, including stocks, bonds, currencies, commodities, and derivatives. Since the type of trading we conduct does not involve the complexities institutional companies implement, we will look at other actions. We will look at what their actions leave behind. That's a much better way to put it, what they leave behind. So we went over volume imbalances in the last one. Basically the same thing as well. These are large candles that generate due to a large amount of orders entering the market, right? During news events or data releases, institutions execute large orders, which leaves behind gaps that should eventually get filled by future price. Here we have an example, and in the last video, you should have had many examples to refer to identify what an imbalance is. Notice here on the 1 hour time frame that we have two very large imbalances. We have and it says that it formed from GDP and unemployment data. So gross domestic product and then unemployment data, which are two pretty big data releases for the economy. And notice that price dipped down, and within the next two sessions, it already retraced to fill the lower imbalance. It did end up going a little bit higher than the first two wicks here, but other than that, it respected the second imbalance. It had no need to fill this imbalance here, because later down the line, price will eventually come through and probably trade through that 1.11200 area. So notice that price traded back into the imbalance and filled what it needed to before moving lower. Usually, and probably on the 4 hour, that's about 50% of the imbalance. And so remember, we went over that in the last video. You mark up the 50%, you draw a line, you enter your parameters, your entry, your SL, and your take profit. Order blocks. An order block is typically considered a price area where a cluster of buy or sell orders were executed, causing a notable shift in the market's supply-demand dynamics. Traders might look for signs of price action behavior around these order blocks, such as strong bounces, reversals, or consolidations to gain insights into market sentiment. Let's look at some examples. A bearish order block is a small bullish candle followed by an engulfing bearish candle. Notice how we drew a rectangle from the middle of the small bearish bullish candle and we drew it outward. We extended it across the page. So this is an order block when you have a very small candle followed by an engulfing candle going the completely other direction. This is an order block, like to the T. Notice this. Price trades lower for the session, and then the next day, it creates a massive 1 hour imbalance to the upside. It hits the order block, sells off back to what? The imbalance, fills 50% of the imbalance, and then trades right back into what? The order block, which then sells off again back down to where? The imbalance. Once it reaches the imbalance, it trades lower to liquidity, to where there was a bunch of buying right here. And then it buys up, manipulation to clear out all the buyers one more time before sending the market what? Higher past the order block. So very fascinating how the market leaves behind certain clues and patterns and candlesticks that form to make recurring trade opportunities. So order blocks occur all the time on almost every time frame. So let's look at a large 1 hour order block. This was a large 1 hour order block that was created that got revisited 3 different times as a really large support. So that means that institutions were most likely buying large amounts of euros at this price level. And that is really what institutional trading is at its finest, is when they invest millions of dollars in the market, the algorithm has a way of pricing it in throughout the number of days in the year. And remember how many limits are getting set every single day. So the market is constantly in this range of motion. And when it comes to a certain level that is held by a lot of buying, it is going to most likely react in a positive way from that area. And what we see with institutional is strong areas of supply and demand and institutional buying orders. I wish that I was able to work at a large company to really understand in depth, because it goes far. It goes very deep. The way that these markets are controlled and manipulated, by all these companies and governments, and truly it is a game that you have to learn how to play. So I want to go to the charts, and I do want to look at Euro USD right now. Man, this was such a fire position. Oh my God. Caught this today. Actually, I broke even there and then I re-entered there. So I ended up catching 40 pips. I caught 40 pips today. So very, very, very happy with that. Let's see here. Euro, USD. Where are you at? There you are. Beautiful. So let's go to the 1 hour and let's look, guys. If you identify one, and here's the homework after this. If you feel like this is something you understand compared to Elliott wave, support and resistance, all these concepts that we've been going over, if this is something you understand, hone in on it and focus on it. Practice it. Go through the entire chart on so many different pairs and study price action with order blocks and what institutions leave behind. I want to see if I can spot a nice order block. I already spot a 1 hour imbalance that was filled in the downtrend. Notice here that we have a nice imbalance. So that is still an institutional concept. So this wick right here, this is probably a 4 hour. Yeah, this was a 4 hour imbalance fill. I'm sure it was also a 2 hour imbalance fill as well. No, it wasn't. 3 hour? 3 hour. This was also a 3 hour imbalance fill. So notice how the wick trades about 50% in between the entire candle. I mean, that is a pure setup right there if you're paying attention to price. Even right here, this little area of price here was a support until it absolutely tanked. So you could have had a 20 pip position off of just the 1 hour or the 3 hour imbalance there. However, I want to go back to the 1 hour and I want to look for a order block that was recent. Technically speaking, this is an order block here. This is an order block here. Unfortunately, this wick kind of invalidates it. When you see a large wick like this, if the body's not pure, it usually doesn't get respected. So notice this large wick right here. I haven't seen too many order blocks get respected that have a large wick like that. So notice how price trades lower into it and just absolutely tanks below that level. So that bullish order block was not a good trade, and you might have lost that one if you took a buy, but it would have been a good position. It would have been a great trade regardless. So let's keep going a little bit further back here. I want to find a very significant order block that is easily seeable. I'm only seeing imbalance here. I'm only seeing imbalances here that are very valid. There haven't been too many order blocks. Let's check the 4 hour. Let's check the 4 hour for some order blocks. I'm not seeing anything. I'm not seeing any order blocks at the moment. Literally none. I see one. It's very small, so I probably wouldn't notice it if it'd be a while. This right here is a pretty good order block. You guys see that? Okay, we have a small bearish candle followed by an engulfing bullish candle. Notice the wick that comes back and fills price. Let's go down to the 2 hour and see if we can see anything else right there. Okay, not much going on there. It's 1 hour. Okay. Some imbalance here on the 1 hour that gets filled there. How about the 15? Yeah, so not a very difficult imbalance, or I'm sorry, a very difficult order block to identify there on Euro USD. So not a whole lot of order blocks occurring on Euro USD at the moment. Man, UJ just absolutely pumping up. I love to see it. Love to see that. Took a nice position on that, so very happy about that. I did already take profit, but GJ usually has beautiful order blocks all over the place. Usually on the 4 hour too. Yeah, let's check this out. I don't want to take too long. I just want to find a pure one. Like a really good one. This one's not bad. This is a 4 hour order block. It's not bad, but it's not the best either. Ah, here's one. Yep, look at that one. See the small bearish candle? Notice small bearish candle followed by engulfing bullish candle. Beautiful, beautiful order block right there. I wonder if it's a 2 hour. Almost. Almost. So, like I said, seasonally beautiful 3 hour order block. That's for sure. Just this trade alone was 74 pips. That's pretty nice. Check the time frame, check the pair. I mean, every pair is so vastly different with so many different opportunities. And when the market's trending like this, it's usually imbalances rather than order blocks. Order blocks are going to occur in more of a volatile market where it's choppier. So, for example, kind of back in here, I'm sure there were plenty more order blocks. Yeah, look at all these. Look at this. Here, boom, order block. Right here, order block. Look at that. Look at this order block. Bearish engulfing, bearish candle followed by bullish engulfing candle. Look at this, another order block here. So you can see that order blocks are there's so many within this consolidation range. It's actually absurd. Look at this one. Guys, now do you see what I'm talking about? Within the consolidation range, there are so many more order blocks than there are in a trending market. Yeah. Absolutely beautiful. Look at this one. This one's small. This one's very small, though. Still gave you a nice opportunity, though, for 56 pips. This is not an order block. This is not an order block. See that? See how it's a bullish candle and then it's a small bearish candle? That is not an order block. That is not an order block. Nice imbalance. That's an institutional concept, right? Look at this imbalance fill. Look at this imbalance fill right here from the 3-hour time frame. Boom. Beautiful. Beautiful. Guys, those are the best examples I can give you right now. This range right here of consolidation, there was 1, 2, 3, 4, 5 order blocks all in that one area. I hope this makes sense. I know this is a recording. Please, 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 please reach out. Schedule one-on-one. Let's get on a call. Let's go over these institutional concepts. If you like them, continue to do them. And it goes deeper. Liquidity, smart money concepts, mitigation, high and lows, seasonality. There's so many people out there too on YouTube that teach this kind of material. One of my favorite is John Fibonacci as well. He's got a premium YouTube subscription for like $6. Shout out to that guy. He taught me a lot within my days of trading as well. And super, super, super good way to trade and analyze the market. So I hope you enjoyed intro to institutional concepts, and I will see all of you on the next one. Take care.